What's happening, guys? Thanks for tuning in for another Sunday scan. This time it's for October 26th and the week ahead. October has been quite a hot month so far. It's tracking just as good as June and July for me, anyway. Personally, I went over how I pretty much hit a brick wall September, not because there weren't plays there, just physically, mentally, and I was just drained. So it was good to reset a little bit, but October just went, from October 1st on, it's been pretty insane. So I think the key is going to be stay firing on all cylinders and don't do anything to get off course. And how I plan to do that is exactly the way that I preach each and every single Sunday scan. You don't need to smash every single day. Yes, there's been a lot of stuff to smash every single day. But what I want to at least encourage you guys to think about is, just like I always talk about, the A+ setups, right? Sometimes that one A+ setup could make your year, right? So we had JKS over the last week. And that was something that I had been tracking on Scan, staying familiar for quite some time. And it ended up being my second best trade of 2020. And I think my third best day overall. But that one trade could be a game changer, could be a career changer for some of you. And so this week we have Snap setting up, SNAP. That could be a game changer. That is going to be a monster trade. The reason that I know that is just because of how it's trading. It's going straight up. And at some point, there's going to be a correction. It doesn't mean that it's going to, completely come apart and, that's just, the end of the move. I'm not talking about that. I'm talking about a highly predictive or a predictable pullback after it exhausts out all the shorts that are, staying short, adding short, fighting short. Once all of that unwinds to the upside, there's not going to be a bid there for a couple days anyway. And just like JKS, we're going to get an opportunity. So if you think about it in terms of A+ opportunities, if you take JKS, if you take Snap potentially, those two trades in that month, whatever month it may be, in this case it's October, but if you can find two per month, and just stay alive the rest of the time. Trade well the rest of the time. Train the rest of the time. That's really all you need to do. And that's what a lot of the great traders do. It's that one or two big trades per month and then just consistency the rest of the time. You don't need to come and crush the markets every single day. Yes, you have been able to do that in 2020, but that doesn't come without, somewhat of, the stress or just the exhaustion. It feels like you can't get away, and really it's just continual every single day grind, which for me, like I said, I burnt out in September. So I think that it is important to really look at what could be game changing for you, year changing for you, career changing for you, and sometimes it comes to that one or two setups per month. And just like I said, JKS was it. And that was a monster trade. Monster opportunity. Snap is coming. Snap is going to be a monster trade. Monster opportunity. But if you keep fighting it, if you keep trying to find the top, if you keep thinking that it can't go anymore, then you're going to end up getting pre-exhausted. You're going to end up getting ran over. And just like JKS, just like PTON, just like any of these trades that have been steadily squeezing shorts out, you're going to miss the backside. So the most important part is to not underestimate how far it can go. Do not fight it. I'd rather take a ton of little Band-Aid, cuts here and there, rather than getting my arm chopped off, essentially, right? So be patient. It's coming. And if you make that small change and just really focus on that one or two big trades per month, think about it. We'll just use a number. Right? So say you make a grand a day, 500 or a grand a day. But then on your big A+ opportunities, you make 5 or 10 grand. Do that twice a month and look at what that does to your P&L. Or for a more aggressive trader, say that, you know, maybe that is a $100,000 or $200,000 trade, right? So all of a sudden, instead of trying to find 4K a day and trying to make $1 million a year, you find those 2 trades a month and you're at $1 or $2 million a year just because you're focused on that A+ opportunity. You didn't pre-exhaust, you didn't use all your resources on stuff that was low quality, which is very easy to do right now, right? So we've had a lot of low float stocks running, which I think is a very important point right now. And I think that just like I say, the market that takes also gives. Well, the market that gives also has a great way of trapping, you know, and taking it right back. So if you get upset that you missed SPI, you get upset that you missed MRIN, you get upset that you missed all these stocks that have been going, you know, low floats, so you start chasing them. Well, keep in mind that these are all trash small cap momentum names. So most of them are not going to work. And, you know, SPI comes out of nowhere, right? EVK comes out of nowhere. It's not something that is expected. And that's really what you need to understand, that it wasn't obvious that it was going to do any of that. SPI wasn't obvious that that was going to be the one, right? And so it's so easy to be like, oh, this is going to be the next one, so I'm going to chase that. And then all of a sudden, you're left with a 6 or a 5 or a 4 average, and the stock is 2, right? So keep that in mind when you're trading these things. You know, it's a great market to build accounts, but it's also a great market to really, you know, kill your account by trying to find the next big play. And we spend so much time, you know, trading all these other names after a big move, thinking that, hey, this is the next one. But the reality is what? 98, 99% of them are not, right? So you're going to be upset 98, 99 times, and then you'll finally catch the SPI, right? If you're not out of money. So just keep that in mind and make sure that you at least are not going for the Holy Grail every single time, because I'm sorry, but it's going to end in a disaster. So Traders for a Cause. I went over the whole looking left thought process. So I'm going to do a video on MDGS and SCKT from Friday. Both phenomenal trades, phenomenal ideas in the room, and it was literally textbook look left daily chart trade. And so if I get 1,000 likes today, so right now go ahead and put a like. Usually we get maybe 350 or so, but if we get 1,000 likes, I will put the video on YouTube probably by Tuesday. But it's all about timeliness, right? So that was last Sunday that I discussed it, and you could apply it all week. So understand these basic concepts. They're going to help you not get bent on the front side of the move, and they're going to help you find the back side of the move. Also, obviously, nobody reads tweets, nobody reads emails, nobody reads anything. So everybody that is asking, where are the recordings from Traders for a Cause, we will be sending them out this week, over the next couple weeks. So we're editing them down, you know, putting them into almost like little chapters for each speaker. So we have downloaded the list of everybody that donated, and you will be getting an email to the list, to the email that you donated with, for access to those. So thank you guys for participating. And again, we'll send you that information probably early this week. I just have to talk to my programmers. Zach is working on the edits, like I said. So we've got probably 25, 30% of them. And so we'll just roll them out as they come out and as he edits them. So again, awesome job. And thank you guys for being part of it, donating, etc. Let's see. We talked about JKS and Snap, you know, not pre-exhausting. So it's okay to trade the front side of the move, but you need to look left and figure out, okay, it's holding this support. So when it comes in, you need to be covering until this support starts to fail and fail and fail and fade off, right? So rather than always trying to find the top, make sure that if you are trading, and there was plenty of opportunity on Friday with Snap, but if you overstayed, if you kind of stuck around to see if you would get more, it was too late, right? And then you get slippage, it comes back up 50 cents. Then you get stubborn, then it starts to grind you out a little bit more. I know the drill. You know, that's what I fight every single day. So if that's you, stay away from the front side of the move. You know, there's no rush. I always put the lines as to where you should ignore it if you have trouble with the front side of the move. Let's see. Always recheck in with that dial. So this is kind of related to trading the names like MRIN, EVK, SPI, and all these types of names. You know, it's fine to be trading trash on the way up, you know, when it's working, or even on the way down. But if it stops doing what you thought, if the risk all of a sudden becomes more, if it starts to fail when you thought it was going to continue, don't forget, you're trading trash. So keep that in mind. One big thing that I noticed this week with a couple of the traders that I help on a daily basis is you come prepared, you have a game plan, you kind of nail it out of the gate, but then they start to hold, right? So you got SCKT, you've got a couple other names where they kind of come in, they start to consolidate, and then they squeeze out a little bit, and then they end up back here. But, you know, you need to understand that a lot of traders are all doing the same thing. There's a lot of heavy, big shorts right now. So if you nail a move and you were expecting it to do X and it starts to go sideways, there's not really a point to stay XXXL size or full size in this current market, right? There's just so much demand that it'll end up being frustrating for you to overstay and then end up giving it back. So just make sure that you come prepared, you take that trade you were prepared for. But if you see yourself trying to figure out that chop, I saw a couple traders, you know, giving it back, trying to, oh, it's gonna break now, and then it swipes back up. Okay, I'll cover because it looks like it's gonna squeeze. Oh, slams back down. And you know, you could just go look at SCKT for that example. But I will get into that on the next video that I'm going to do. But anytime you're 50, 100 million shares, just at least 100 million is without a doubt, you know, be cautious. But anytime that you are in a situation with a stock that's tracking for 100 million shares, I usually kind of put the brakes on as far as trying to figure it out because you end up just getting chopped around, and more often than not, you end up probably lower than where you were. But that's about it. Be in the business of being prepared versus midday figuring it out. So anytime that there's 100 million share trades, just, you know, it's okay. Focus on something else. You know, you don't need to figure it out as a trader. You know, if you're involved and you have a good average, great, let it work. But if you're new, take it off radar. Because if you noticed, SAVA, JFU, there was a handful of them, but everybody always goes to the hot stocks of the day. But if you just focused on a couple other ones that maybe were not that hot, you're going to get some great results without the crazy risk of who knows what it's going to do that you get with stuff like SCKT, MDGS, front side moves, things like that. So last but not least, be cautious of give backs, right? So we're in a good market. Things have been pretty friendly overall, but you know, sometimes it's very easy to get complacent, and it's very easy to say, okay, well, I'm up big on this. I'm just going to, you know, kind of see what this does, and I'll let this work. Don't do that. You know, if it's not doing what you expected, kick it off. You can always get back in. It doesn't matter. It doesn't matter. I'd rather be out and even get back in lower or higher, depending on what side I'm on. Even if I miss out on 10, 20, 50 cents, at least I'm safe. At least it's, you know, it wasn't doing what I expected, so therefore, why am I in the trade, right? So that's the whole dial, checking in with the dial. So anyway, let's get right into watches, and we'll go ahead and get prepared for Monday. All right, so jumping into Sunday scan, or at least scan for Monday. First and foremost, Wesley Stripes, you get the t-shirt this week. Thank you for leaving a comment. All you guys got to do is leave your biggest takeaway, or you know, basically what you learned What was it that was an aha moment for you? That helps me be able to relate to the traders on the channel and maybe focus more on particular subjects, things that were like, oh, it finally makes sense. I want to spend more time on that kind of stuff so that there's other traders that can have those aha moments. So please take the time, leave a comment. And again, like I said, if you like this video tonight and we get 1,000 plus, I will do another video on either Monday or Tuesday, probably Tuesday. But that'll be about looking left related to SCKT and MDGS, and you can see how we traded it in the room. Other than that, let's get right into it. So Snap. Snap's going to be crazy. It's up another buck after hours. You know, look, ideally we get 45, 47, some type of parabolic. I think that there will be a little bit of whipsaw. Maybe it ramps up, fades off, and that's going to be a big share scalp, right? So the one thing when you have opportunities like this is that you can really size, but you also have to be on that cover side. So it's great for great entries. There was a lot of great entries throughout the day. You know, any of these failed follow through momentum midday, there was a push towards 43s and it faded all the way to 42. And my thought was it was going to go to 41.70, 48, 41.80s. It went to 41.82. If you covered, you did phenomenal. If you were trying to let it work on size, then obviously you minimized or gave the trade back. So there is that, you got to find that balance when you're trading the front side of, yeah, you can size into these things, but make sure that you're not going for the whole move. Just take the meat, move on, don't ask questions, and look for the next. And that's something that I have to work on every single day as well. Just because you want it to be that day, you finally sized in, you're ready for it, but more often than not, it's gonna hold. And you can just draw a simple line, just like I said in the room on Friday. I mean, you know, there's support right there, 42.10s, there's support right there at 41, basically 41.80s and 41.90s, 42 range, plus or minus 20 cents, you know, 41.80, 42s. So you want to assume that this area is going to hold. And so therefore it should be a cover, no questions asked, at least a good portion of the core. If it stays heavy, you can always re-add. And that's similar to the situation with JKS, you know, as far as getting that nail on the backside. So, higher the better, parabolic move, reactive trade. I will treat it as a reactive trade, cover the flush type of opportunity until we start to have those fails, and at which point I would not underestimate the potential unwind. I'd be going probably for a $1.50, $2 type move, maybe more, but you know, for me, a highly predictable $1.50, $2 per share move to the downside on, you know, an aggressive position is a great trade. So we'll see what happens, and I'm gonna stay focused and hopefully, you know, not get too aggressive or at least stubborn on the front side of the move. But weak opens, ramp red to green, or failed follow through, I'm interested. Until the key levels, which I will post in the room, that's going to be what's important on that snap trade. So JMIA, very nice. Citron has been positive about this, put out a report this weekend as well. I think it was like 14, 15 page PDF. So far, it's been bucking the trend, you know, and it's been holding extremely well. And, you know, now we know why. Obviously, there's a bull thesis behind it with Citron, and they've been talking about it for a little while now. But, you know, they're suggesting that it could be worth $100. It's generational buy, et cetera, et cetera. So you can see the wicks, you know, it's been getting bought up. So we're starting to get pretty aggressive here, and this could continue to push the next levels maybe into the high mid-20s before it has an issue. So for me, higher the better gap. I feel like it could be a fade off the open, and then see if they catch it. And if they catch it, you know, let's see how it reacts. So let's say we gap up and we have a $1 or $2 gap. I would love to fade that back. Potentially, if it fails to follow through. I need to see a failed follow through setup. Ramp, stuff, you know, and failed follow through, lower highs. And then I'm thinking it could give back that entire gap. But after that, we'd have to see what happens. And so to me, that's a cover, at least a good portion of the core. And if it stays heavy, then I would scale in, and then maybe we get another $1 or two. But for now, you know, ideal world would be a $1, $2 gap up, fades back to 50 cents up or flat, see what it does, and, you know, make a decision on the scale from there is what I would be looking for. But anytime that these things get aggressively pushed, or, you know, everybody's a bull, or, you know, aggressively promoted, as soon as they stop going up, there's a good chance that they're going to pull back aggressively, just as this move was pretty aggressive to the upside. After that, we need to find out what happens after the consolidation, and I want no part in that with size. I don't want any part in anticipating that with size. I will anticipate the blow-off move and the pullback, but as far as the consolidation, I want no part of size until it figures it out, in which case I would scale in. DSS, this one has a history of moving. They did a reverse split, I think, back this day over here, and it had a pretty big move. It was of newsletter interest, so there is a good chance that we get a newsletter involvement in the morning, potentially. But, you know, I swiped some on the PR, and I put on a little bit more lower before the close. So my thought was, I like the risk reward, 50 cents risk-ish, plus or minus, for, you know, if it is the Monday ripper, then maybe it goes $1, $2, $3, depending on shorts, depending on, you know, volume. It's thin enough. It has a history of moving. It hasn't ran in quite some time, and it's at the lows, so it does have room. Typically, I look for, you know, where could it pull back without meeting any resistance? And I mean, we're at $6 on this gap down and this high volume day. I mean, we pretty much have room till 7. So that's room to run without much resistance until it either traps shorts and squeezes more, or it just fails. So that's also sort of a looking left kind of situation where, you know, I would be looking at this area as that level. And you can see that this last run up also peaked at that level. So that's what I look for. It has room to run. Will it run? I don't know. But in this day and age, in 2020, on Mondays, if this thing is gapped up at 550 and it's up $1.50, it's up 20, 30%, whatever, everybody's going to wonder why it's not up 200%, and they'll buy it. So we'll see what happens. Lower the better, though. I would potentially buy dips if the trend continued. If it has trouble at 5 and 550s, then, you know, forget it. I'm not gonna try to you know, find a trade that's not there. It's I saw an opportunity. I like the risk reward for a potential runner on Monday. If not, move on. The next ones are all failed follow through. So SCKT, ZDGE, DOGZ, and MDGS. All very similar candles, all very similar action. Traded them all on Friday. Likely all gap down. However, higher the better. So if they all gap down 20 cents, that doesn't take them off my radar. It used to. But then I saw other traders, you know, still killing it on those trades, and I'm like, man, why didn't I take that trade? And usually it's because it didn't gap up. I wanted it to be green to be able to short it. So I've since changed, you know, this is many years ago, but just because something gaps down does not come off my radar. There's still opportunity there. If you were going to short it because you thought it was going to gap fill and it's only filled 10% of that gap, but it is gapping down, there's still a good trade there. So this was another looking left opportunity. We talk about this all the time. I will go over it again if I get 1,000 likes tonight. Just a phenomenal trade in the room on Friday from the broadcast idea. So again, DOGZ, same thing. I didn't even have any involvement until over here after it failed to follow through. So for me, pops, 220s, going backwards again. ZDGE. ZDGE I actually think has a potential of a little bit of a bump up. and just it basically kind of retests people's conviction. You know, like, hey, how biased are you? How much do you believe that this is going to fade all the way back, kind of thing. So there wasn't too much of a reason for shorts to cover. You know, it pretty much stayed in trend most of the afternoon. The fact that it did kind of rally back a little bit leads me to believe that a lot of people did end up covering. But for me, higher the better. I'd love to see it retest towards 240s or so, 260s rather, the prior VWAP, and potential follow through. I think that there'll be a big opportunity here. This was a fantastic trade. Actually long biased into the move, but then a newsletter got long, so my rules are, you know, hit the bid, get out, and then think about potential short if it stays heavy after a newsletter comes in. It's not just a short ever because newsletter involvement. If it was like that, you know, everybody would be doing it. You have to be cautious of everybody doing that, because if it ends up holding and everybody just short, guess what? It's gonna squeeze. So you always, there's no easy trade there. But the easy trade for me is if I have a position, I just get out. Not worth it. I don't want to be on the same side as, you know, 5 or 10,000 sheep, you know, doing the same thing. SCKT, higher the better. Ideally, we get a push towards 280s, 270s, but I mean, to be honest, I think this is probably just toast. So hopefully it gaps down, or hopefully it gaps up, but I think it probably gaps down under 240s, 230, 240s. Potential fade towards 180s, something like that in the near term. But definitely got longs stuck hard. It fooled around with shorts. Looking back, you know, it's pretty clear picture, but also, you know, we've talked about this before. So looking left, you guys should have known that. If you were in the room, you knew that. If you were in the room, you did pretty damn well. Continuation. MRIN, possibility. This is one of those where it is a trash name. So don't sit there and think that it has to do anything. However, the fact that it came back, it had 160 million shares, it had another 90 million shares almost. It ramped up, potential intraday squeeze, but if short stayed, if they're still around, this could end up being a potential good squeezer. So I'm not writing it off yet. I'm reminding you that, you know, you're trading trash. I'm reminding you that if it fails, it's going to continue to fail, and don't overhold it. But if this thing does start to hold trend over those 370s, the 4s, the 450s, this is one of those that could do something like KXIN where, you know, it just held oddly well. Maybe there's a buy-in. Maybe we have some crazy action. So, you know, KXIN was difficult to trade. But, you know, you might have that situation if there's a buy-in by, you know, Monday or Tuesday. So I'm curious. Curiously interested, but nothing that I'm too aggressive about. But always remember in the back of your head that, you know, if you're chasing stuff and it stops going up, have a stop, have a plan, because this is the kind of stuff, just like all these other ones, where it'll take your money right back. Last couple, Mark. Mark is, as you guys know, one of my favorite stocks. Not really. But anytime I used to tweet about it, I'd get like 900 replies about how I was wrong, and that was right about this area here. But at any rate, it's been just in the gutter for a long time. They had some Intel news on Friday, so I figured Intel, I figured Twitter, I figured StockTwits, I figured, you know, they'd probably pump all weekend, potential gap, and then just I'm good with it. I don't want to overhold that thing. So I sold some into the 160s, like I said in the room. I bought the tweet. You know, I bought their tweet. I felt like it was a good enough story for the masses. You know, Mark has a cult following as is. So the shareholders will never sell. They'll ride it all the way back down to 20 cents. So for me, I'm just kind of coming in, taking some off the table, see what it does Monday, and then leaving. I'm not looking to overstay on it like, you know, pretty much everybody has done. Last couple, ADXS. It looks like a little bit of a buyer in the tape. You can see the wicks. We talk about the wicks a lot. So I think a key level here is this 54 level, 54, 55. So let's see if it starts to base at 50 cents. It has a catalyst into November. You can kind of see some of those comments on Twitter or in the room as to why this potentially could be a decent mover. So I would not be chasing it, but I'd be watching. If it starts to build over 50 cents and starts to push, then we might have a potential trade there. AVXL, beautiful, nice ABCD type setup. Again, ABCD, and again, you know, a little bit more near term, starting to kind of get those wicks that we talk about. This was a long idea. After this big day, I was impressed with how it came back. So all the dips got soaked from there. So this is definitely one that could potentially push towards 657, something like that, before it takes some time off. So let's see what happens with that. As usual, I have the staying familiar section. If you guys click the description, you'll go over to the website and you can see the other stocks that I am watching. Basically what I do is I just set price alerts, both, you know, for breakouts, breakdowns along the way, to make sure that I don't lose them off of radar. But the key is that I don't have to use my screen space to watch them. My room will just say, hey, it's time to watch. So that's the goal for me, those on those ones. I will set price alerts on all of them. I know what kind of trade I'd like to take on them, so that, you know, if something hits X price, I'll be prepared for that. And you kind of make that preparation as you're putting in the price alerts. You can also add notes to the price alerts in case you forget. So when it does hit a price, it'll remind you what your game plan was. So that's about it. Again, 1,000 likes tonight. I'll do another video about looking left with some actual real examples. Anybody that was at Traders for a Cause was able to put that to work quite a bit this week. There was quite a bit of opportunity. And again, for those that did not hear it at the start of this, the videos will be coming. We downloaded the entire list of donors, and we'll be creating you guys accounts to view it. And, you know, we will have opportunities for others. If you did not take part in the event, or if you did not donate, we will have an opportunity for you to be able to view it as well. So that information will be given very soon. And other than that, have a great weekend, and we'll see you in the room on Monday.